Wasabi Wallet. Unfairly private.
Welcome, everyone. Oh my God, the sky is falling. We're revisiting Bitcoin prices not seen since October. We're going to dive into a little bit of that today. We've got lots to talk about, plenty of news. We're going to talk about that. We're going to talk about a paper I came across today about tracking Bitcoin bull and bear markets using, instead of traditional month and day and year time, using block time. And I thought it was kind of a novel approach to it. Again, take everything with a grain of salt, but we've got lots to talk about. We've got, I guess, sports related, Bitcoin related sponsorship type news going on. I'm sure you've heard a little bit about it. We're going to talk about Marathon doing a speculative attack on the dollar, and some senators getting together to repeal some of that terrible, onerous KYC in relation potentially to Bitcoin laws that got passed through with the infrastructure bill. So lots of stuff to cover today. As always, this is live. Anything can happen. So I defer to my good friend, Bill.
We'll do it live.
Okay.
We'll do it live. Fuck it. Do it live. I'll write it and we'll do it live. And thing sucks.
If you haven't already, make sure you hit like, subscribe, share. All of those things really do help. I really do mean that. They really do help get the show to plenty more eyeballs. As always, I am Ben with the BTC Sessions. This is your daily session.
Hodl the Bitcoin.
Before we dive into the news, let's take a look at where we are in the market as everything is on fire. No, it's really not that bad. We're at $56,800 per coin. A single US dollar will pick you up 1,760 sats. Pretty good deal, in my opinion. 89.89% of all Bitcoin has been mined. That'll be hitting 90 in the next month and a bit here. In terms of fees, 5 sats for the next block. Anything beyond that, 1 sat per byte will do you. So not too bad at all. Let's when in doubt, zoom out, friends. So the one day is looking a little scary. Week, so spooky. 1 month starts not looking too bad, and then when you look at the year to date, again, like, we're basically hitting kind of some of the tops that were hit back in April, May, and then the last time we saw these prices was mid to early October. So stack some more sats. Maybe if you got some dry powder, grab some more. Of course, shout out to Shakepay.com. If you're in Canada, good place to stack those extra sats during this dip. And they've still got their killer referral going on right now. So if you click the link in the show notes, after you sign up via that link and you buy your first $100, you'll get $30 for free. Pretty good. Not too bad at all. Also, once you refer a friend, same deal applies to you and your friend. You both get $30, and then you can shake your phone every single day for free sats. I'm back on a 50-day streak now. I got up to 200 and something days, and the number of sats you get every day increases every day of that streak that you get. When I lost it, I was very sad. And my friend, poor Griffin Dave on Twitter, he got up to 400 and something days he'd been shaking sats, and he was maxed out, and he lost his streak like last week. So I feel for him. I feel that pain, but try not to lose it. Set alarms, friends. Let's keep going here. LEDN, you can use your Bitcoin for a variety of different things. In particular, if you don't want to sell your Bitcoin, but you do need dollars for the moment, maybe it's a cash flow thing. I've found that their Bitcoin-backed loans are exceedingly useful in those situations. So you deposit Bitcoin, you get dollars to your bank account within 24 hours. And when you pay back those dollars, you get back the same number of sats. Of course, they also have savings accounts for Bitcoin and USDC, and they've got their B2X offering. If you're feeling mega bullish, be sure to check them out. And they do have a referral program. If you sign up with that link, you'll get $10 in your savings. So check them out. Now, I live on Bitcoin. Bitrefill helps a lot with this. Every gift card you can imagine, ton of different countries have access to this, and you can pay in Bitcoin both on-chain and via the Lightning Network, which I do all the time. You earn sats back as you shop, and they've got a referral program as well where you get $5 if you sign up friends and family. What else we got here? Of course, Keystone. We'll be talking about them a little later on. They've got a cool new integration with a mobile wallet, but they are 100% air gapped, meaning you never plug it into anything, internet connected. It's always done offline via QR code, and that keeps the keys to your money safe and away from a potentially malicious internet connections. Works with all my faves: Blue Wallet, Wasabi, Spectre, Sparrow, you name it, they got it. And pretty damn good in a multi-sig. So check them out. Links are down below. They got a Black Friday deal coming up in about 7 days. So set those reminders. And finally, if you're backing up any important Bitcoin wallet, get it in steel, friends. You don't want it on paper. Fire damage, water damage, accidental disposal just because it's a piece of paper. Solid steel can help you prevent all those things. Check out the BillFodl over at privacypros.io. Links are down below. And let's start talking about Bitcoin. I figured maybe it's a good day for some hopium here. Is this hopium? I don't know. This is interesting little analysis here. So this is Michael, aka at Fair Free Digital. He's going to be on the show, by the way. He's going to be on the show in December. So keep your eyes out. Maybe give him a sub on Twitter. Anyways, so he a while back in September, he dropped a paper on the idea of measuring bear and bull markets in blocks rather than like the typical like 4-year. Because Bitcoin itself doesn't run on human time, right? It has block time, and that's it. So he has this thesis, and he's looking at it from the perspective of lengthening bull cycles and shortening bear cycles. So I really like this idea, and I dove into. So he did a paper back in September, but he has a new updated one, which is here. It's called X Marks the Spot. If you follow him, you'll find it there, but just tweet at him and ask if you can't find it. But he did a little tweet thread on the original idea when he first had it. And so I figured I'd just kind of go through to give you a bit of a teaser. Again, the original paper starts it off, but let's just take a peek at it. So block-based take on the 4-year cycle theory. So he says lengthening bull cycles, violent abbreviated bear markets, and no diminishing returns and no diminishing losses. So contrary to the lengthening cycle theories that we saw before, the assumption was that there would be diminishing returns because it's harder and harder to bump the market cap up as high. It takes more capital to do so, and that it would be muted because more people would be holding Bitcoin. He doesn't seem to think so. He thinks that, yes, lengthening cycles, but equal amounts of volatility, at least for now. So he said the idea of diminishing returns makes a lot of sense, but I personally also think it is wrong. There are currently too many factors to assume diminishing returns as the most probable scenario. I reference you again to my favorite chart, the Fed's balance sheet, and he makes the point that we're printing unprecedented amounts of money, which could contribute to an equal amount of upside. Now, he said there's a big difference between November of 2012 to December of 2013 versus July 2016 to December of 2018. And that is that the first cycle, the Fed was easing. And in the second cycle, the Fed was tightening. I see this as the main driver behind the false flag of people believing in diminishing returns. That's probably maybe a fair thing to assume. He goes on to say, the problem with using data time, aka regular human time, to make price predictions or direction of price action and overall market direction is that the date time is completely disassociated from anything Bitcoin's network actually cares about: difficulty, Bitcoin issuance, etc. When price is placed on a block-based x-axis, the patterns of the price action become easier to see. So he says, I'll let the charts do the talking in this section. So if you're listening to this on the pod later, you might want to go back and take a look at the thread or just read the paper. He says the chart simply shows plots price by blocks. The y-axis is the price and the x-axis is the block height. All right. He goes on to say the chart simply plots the price by blocks since the halving. So the y-axis is the price and the x-axis is the block height since the previous halving. So he has the 2012 post 2012 and the post 2016 prices charted against number of blocks since the halving here, and then the current mid-cycle that we're in right now. He said we can draw a line from the cycle top to cycle top. So what he's got is the absolute top of the 2013 market and a line going through that to the absolute top of the 2017 bull market. And he said that basically looking at the blow off tops and trying to extrapolate out where our next blow off top may be. So he says that he then adds in the previous cycle tops from 2013 and 2017. 2017's top definitely occurs later than 2013, so we're seeing something different. We should assume that the same will continue to play out, so that it'll take longer to hit that blow off top this time around, just as it did in 2017 versus 2013. So he says the big question is how do they calculate that extra length of time between blow off tops? And so he said we could just plot the number of blocks between having 1 and having 2, and then add that to having 3. And so if he did that, then right now we're at block 700 and let's go back to BitBo. We're at block around 710,000. We'll call it that. Okay. And so he says that basically it kind of looks like we'll be around block 96, or so maybe he's looking at 960. I'm not sure what he's doing here. Anyways, basically he's looking, this is after number of blocks after the halving rather. So the first halving, the blow off top came 62,000 around almost 63,000 blocks after the halving. The second blow off top came around almost 80,000 blocks after the next halving. And then if it went linearly like that, the same number of blocks, then around 96,000 blocks after the next halving. However, you could also do it as a percentage, in which case it would be around 100,000 blocks past the last halving. And so he kind of finds out a narrow range roughly of where that would fall, depending on how long it takes for that blow off top to happen, if this is correct. And so then he goes and he looks at that narrow range of where that blow off top would show up on that chart. And depending, this is the interesting thing. So he goes, the 2 points would be between block 96,089 and block 104,456 after the halving. And it gives a pretty wide price range because this shit is steep. But depending on when it happened, if it followed his prediction, it would be a top of 302,410 bucks March 9th, up to a top of 632,920 if it took longer than April 9th, or if it took up to April 9th to hit that blow off top. And again, he's just using the data here. He's also, he said that the return here would be a 33x to a 72x, depending on he said that's about an average of the previous 2 cycles. It appears the gap between bull and bear market is also shrinking. He said that basically using the absolute bottoms of the previous bear markets, he was also able to kind of find a line and see that they're shortening if this trend continues. And he said that the bottom would be somewhere between 62 and 72K, depending on if it continues the way it's doing. So 58K, gang, sorry guys, after this cycle may not be a revisit. So anyways, I found it kind of interesting. Who knows if this actually plays out? But I do like the idea of looking at Bitcoin's behavior in block time rather than traditional time. And even previously, I was thinking of it in the sense of, oh, it's all going to happen within 2021, which, you know, obviously people are going to think in regular time because that's how we measure time, but that's not how Bitcoin measures time. And the idea of lengthening cycles that are also under the influence of the current macro environment. So I like that he drew some comparisons of the macro environment from 2013 versus 2017, and that they may have contributed to that. I think that's a possibility. So we'll see. I'm curious to have him come on and chat a little bit more about this. Again, this is kind of me looking at it over the course of the day, and it's just another fun thing to look at. Take everything with a grain of salt, friends. Obviously, nobody can predict the future, but this is just one way of potentially looking at it. And again, his paper is called X marks the spot, the pi block top. So be sure to check that out. Let's keep going though. Let's move on. I said there's kind of some sports type news. The Staples Center is changing its name to Crypto.com Arena. This in LA. Staples Center is getting a new name. Starting Christmas Day, it will be the Crypto.com Arena. This is the downtown Los Angeles home of the NBA's Lakers and Clippers, the NHL's Kings, and the WNBA's Sparks, and it will change its name after 22 years of operation. Damn. Person with knowledge of the deal tells the AP or the Associated Press that Crypto.com is paying $700 million over 20 years to rename the building. The person spoke on condition of anonymity because the parties aren't publicly announcing the terms of what's believed to be the richest naming rights deal in sports history. Now, we'll see. I guess we'll see how that continues to go. If Crypto.com continues to be a profitable enough company to shell over 700 mil. But this one I like a little bit better. Houston Rockets announced partnership with Bitcoin company NYDIG. I like it more because it's using the specifically Bitcoin. The announcement here, Houston's Rockets today announced a partnership with NYDIG, a leading Bitcoin company, as the official Bitcoin services partner and Bitcoin platform of the Houston Rockets. NYDIG will be the franchise's exclusive partner across a range of cryptocurrency services. The sponsorship will be paid in Bitcoin, which is awesome, and the proceeds will be held in NYDIG's secure, regulated, full-stack Bitcoin platform. So they're stacking sats and they're holding it as part of the sponsorship. Quote, from basketball operations to business development, our organization has leaned on advancements in technology to remain on the cutting edge. This from the Rockets president. Partnering with NYDIG allows us to leverage the growth of Bitcoin to provide creative rewards and payments options to our fan base and associates. Expanding the partnership between the Fertitta family and NYDIG to the Houston Rockets was a natural choice. This from the digital asset strategy at Fertitta Entertainment. The Rockets are a leading sports brand, and NYDIG is the leader in Bitcoin financial services. Together, we will deliver new opportunities to Rockets fans and the city of Houston to learn about and use Bitcoin. We are thrilled to have found forward-thinking partners in the Houston Rockets and the Fertitta family who understand that by embracing Bitcoin, companies and brands can build loyalty with this expanding and influential customer base. This from the chief marketing officer at NYDIG. The Rockets will be paid in Bitcoin, and this partnership underscores our excitement about the Houston area and Bitcoin innovation taking place there. And then they go on to say that Rockets will work with NYDIG to expand the Bitcoin ecosystem through access, educational programming, and community support initiatives while providing NYDIG significant exposure across the team's social, digital, and in-arena platforms. In addition, NYDIG becomes the first naming rights partner of Toyota Center Suite levels to be named the Bitcoin Suites by NYDIG and will be reserved baseline apron signage during the Rockets games. Maybe I'll have to go to a Rockets game and get one of those Bitcoin Suites sometime. That'd be fun. Anyways, I like this announcement more. It's very Bitcoin centric. Let's keep going here. Marathon Digital to raise 500 million in convertible notes to purchase Bitcoin and Bitcoin miners. So this is kind of and they say it here, but this is kind of a play on what Michael Saylor has been doing, using debt instruments to finance the purchase of more Bitcoin. So today, Marathon Digital Holdings, one of the largest publicly traded Bitcoin miners in North America, announced a proposed convertible senior notes offering. The firm plans to offer $500 million aggregate principal of convertible senior notes due in 2026. So basically, they're giving an offering to somebody. Somebody lends them money for them to do with as they please. In this case, they say they're going to buy Bitcoin and Bitcoin miners. When the notes come due, I believe that they can either be redeemed for stock options or potentially Bitcoin. I don't know. Anyways, so Marathon intends to use this proceeds to acquire more Bitcoin and Bitcoin mining equipment, taking a play out of Michael Saylor's MicroStrategy playbook. The pricing, interest, and conversion rates on the Marathon notes have yet to be determined. The private offering will be available to qualified institutional buyers under the Security Act of 1933. Marathon intends to give the initial purchases an option for settlement within a period of 13 days from the including the date of issuance to purchase up to an additional 75 million principal amount of notes. So yeah, speculative attack on the dollar part. I don't know how many there have been now. Plenty. Let's keep going. Some senators are seeking to amend that reporting changes in the infrastructure bill. There's some bad regulation that came down that it's just too broad and sweeping, and it may be interpreted as onerous on people that have no way to enforce it. So basically what they're saying is, I'll just read here. So U.S. Senators Ron Wyden and Chairman of the Senate Finance Committee Cynthia Lummis are introducing a bill to amend tax reporting requirements in the infrastructure legislation set to become law on just the other day, actually. So the new bill, the text of which was obtained by Bloomberg, seeks to override a provision in the infrastructure legislation that cryptocurrency investors say is overly broad and would stifle growth of digital currencies. In September, a tax change introduced in the bill would require U.S. persons receiving over 10 grand in Bitcoin and cryptocurrency to report the sender's personal information in the to the IRS, extending the provisions of Section 6050I that currently only apply to cash transactions. Quote, our bill makes it clear that the reporting requirements do not apply to individuals developing blockchain technology and wallets. Wyden said in the statement, per the report, this will protect American innovation while at the same time ensuring those who buy and sell cryptocurrency pay the taxes they already owe. So basically, it's an amendment that says if you just create software, if you make software that people can use to just send Bitcoin transactions, like ones that you find in the App Store that you don't hold the keys to, you're not custodying anything for anybody. Well, it not only would it be impossible to do, but they want to make it so you're not obligated to collect all the tax information from everybody using a Bitcoin wallet, because it's like a cash transaction, right? It would be actually impossible to enforce because most of it is free and open source software, right? Anybody can replicate it and anybody can get a Bitcoin wallet. That's just the way it is. And so why should somebody using free and open source software or creating free and open source software have anything to do with what's transacted on that wallet? They have zero control over it. It's just an app. So yeah, that's that. Another person joining that fight is Ted Cruz. He has some stuff about it on his website as well. And he's called it a devastating attack on the emerging cryptocurrency industry. Moving on, Jordan Peterson. Guys, did you see the interview with him and Savadine? It was pretty solid. There's some good aha moments in there. Safe, author of the Bitcoin Standard, was or joined Jordan Peterson, best-selling author, host of the JBP podcast, to discuss money, economics, incentives, decentralization, Bitcoin, and currency. So after the show was filmed, Peterson tweeted out that he learned a lot, bought some more Bitcoin, inflation be damned. Not bad. There's some pretty solid quotes in here. I'll read a few of them. Safe said, there are no insiders in Bitcoin. Bitcoin only has users, no admins. There is nobody with a master key. He said, at the end of the day, what makes me pay attention to Bitcoin is that it is neutral money that nobody can control. And finally, he said, from a mainstream perspective, money is the creation of the state. And the only question is what the state's role in the money management of money is. But from the Austrian perspective, money is a product of the market and not the invention of the state. The state's meddling in money is irrational and cannot succeed for the same reason central planning does not succeed, and is also the root cause of the majority of economic problems that all economists are concerned with. So yeah, highly recommend. Check it out. It's on YouTube. It's on both Safe's and Peterson's podcasts. So it's a good listen. Check it out. Synonym. So John Carvalho, Bitcoiner, he used to work for Bitrefill. He's done a bunch of stuff around the space, but he announced Synonym, which is a architecture for a self-sovereign economy utilizing the Lightning Network. And so it's dedicated to bringing new utility and user experiences to Bitcoin and Lightning Network. It officially launched just the other day. Quote, hyper-Bitcoinization won't magically happen. In order to live in a world without big banks, oppressive regulation, or big tech presiding over our lives, we need a strategy and ecosystem to replace the legacy economy. That is where Synonym comes in. So it basically, it combines Lightning's speed and efficiency with an architected ecosystem of open peer-to-peer platforms, applications, and it hopes to accelerate Bitcoin's ability to act as an independent, self-regulating economy. So they've got something called slash tags, which is a protocol that leverages a web of trust model to create interoperable, uncensorable networks connected via encrypted private channels and feeds. So the plans for that include a search and publishing platform that enables users to create and monetize data and use user-centric, decentralized social media platforms. They also are releasing Blocktank, which is a full-service Lightning service provider, which allows businesses, platforms, and apps or Bitcoiners to configure and purchase Lightning Network connections and liquidity instantly. So if you've been setting up a Bitcoin Lightning node previously, you know that incoming liquidity can be tricky if it's not if you're not well connected, right? If you don't already know people with liquidity willing to lock up with you, it can be a challenge. And then they also say that this is interesting. As part of the family of companies that make up Tether and Bitfinex, Synonym is positioned to integrate all these companies' products in a strategic way for Bitcoin. We can reroute these resources back to Bitcoin's development. So basically what they're doing here is they're going to have instant Tether tokens, which will be introduced to the Lightning Network within our apps and within Blocktank LSP for token channel liquidity. So basically, you can have US dollars on Bitcoin. Yeah, they've got a ton of stuff going on here. There's a lot to it. I don't want to dive too deep down this rabbit hole. There's just so much, but yeah. Basically, you're going to be able to utilize Bitcoin and Lightning and have instantly created Tether tokens. So if you want to park in a quote unquote stable dollar value, say you have bills or something and you want to sit in Tether just for a moment before your bills come out, then that can work as well. Yeah, interesting. I'll have to play with it. I obviously don't have firsthand experience yet, but yeah, exciting. Pretty good video from Reason dropped the other day. So you can just find them at Reason. But the tweet that they put out, environmentalist attacks on Bitcoin are best understood as a strategy by economic, media, and political elites to undermine a powerful new form of money that they can't control. Yeah, it's pretty solid. It's about 7 minutes long. It talks about the actual energy use of Bitcoin, where it comes from. It's very concise in deconstructing the terrible arguments that we've been seeing all year and for years beforehand. It's pretty solid. It talks about how linear Bitcoin's energy usage isn't linear, but rather just the cost of securing the base network, and that the number of transactions around that can grow exponentially and in no way be correlated with that base layer of security. So, yeah, it's pretty fantastic. Highly recommend checking it out. Let's get into, I don't talk about shitcoins often here, but I found a couple things pretty funny that I had to bring up. Somebody went and created the NFT Bay, basically a ripoff of Pirate Bay, but they literally took all existing NFTs and put them as one giant torrent file on NFT Bay. It's 17.96 terabytes, but it is every NFT that has ever been created as a free downloadable file. It is the ultimate right-click save of all NFTs. It's super hilarious. I'm super glad it's got so much. There's like 1,300 quote tweets, 6,100 retweets, 15.8 thousand likes. Hats off to Jeffrey Huntley for this hilarious troll. I'm all about it. I'm here for it. Kudos to you. Also, in ridiculous shitcoin news, so I think it was Peter McCormick tweeted this link out the other day, being like, it's not the next Bitcoin. There is no next Bitcoin. This is from the Motley Fool, and the title of this article is, "Here's Why Cardano is the Next Bitcoin." And I was like, I wonder how many people have written articles about what the next Bitcoin is with different coins. The hilarious thing, though, is as I was searching from the same publication 24 hours earlier, "Here's why Ethereum is the next Bitcoin." Literally, look, it's shameless. They're different authors, but it's the same publication within November 16th at 7:37 a.m., November 17th at 6 a.m. Less than 24 hours, flipping from oh my God. Like, it's ridiculous that, yeah. Sorry, November 17th at 6 a.m., November 16th at 7 a.m. Yeah, okay. So yeah, about 23 hours in between deciding what the next Bitcoin will be. Now we changed our mind. It's Ethereum. Oh wait, no, now it's Cardano. That's the next Bitcoin. Well, here's the hilarious thing. I did look up, I just did a search for the next Bitcoin or anything in that realm. Look at this image of all of these terrible articles. Here's why Cardano is the next Bitcoin. 5 tips for finding the next Bitcoin, Ethereum, and Ripple. Ripple could be the next Bitcoin. 7 cryptocurrencies under $2 that could be the next Bitcoin. A cryptocurrency without a blockchain has been built to outperform Bitcoin. What is the next Bitcoin? Is EOS the next Bitcoin? Pay attention to Peter Thiel. Why Ethereum is the next Bitcoin. After 4 years, is Decred better than Bitcoin yet? Which digital currency will be the next Bitcoin? Move over, Bitcoin. Here comes Litecoin. Is Dogecoin the next Bitcoin? Hashtag Dogecoin rise. Is Tron going to be the next Bitcoin? It's never ending, and none of them are the next Bitcoin. Bitcoin is the next Bitcoin, and we will forever see a revolving door of shitcoins trying to use the Bitcoin name to get a little bit of notoriety and to stack some extra sats for their founders. So that's, I don't know, what more can you say about that? Anyways, there is no next Bitcoin. And one last thing I wanted to touch on, guys, Nunchuck. I did a video on Nunchuck on desktop a while back. It's a desktop, now mobile wallet that allows you to create a native wallet, like a hot wallet, and it also allows you to import keys for various hardware wallets, and it allows you to create multi-sig wallets. So it's kind of like an all-in-one solution. So I did this video on Nunchuck quite a ways back. I'm sure that it's been updated a lot and has a lot more features now, but they just released also a mobile app, which is really cool too. It even has like messaging and stuff in it, which is kind of interesting. But yeah, I was very excited to see that. I'm going to be playing around with it. You can get it both on iOS and Android. Now, important Nunchuck app is still in beta. Encryption will be enabled in the next release. So just be aware, I wouldn't put a lot of meaningful money on this yet. As they said, it's in beta and it's not encrypted right now. So if you want to experiment, check it out, but just be cautious there. But I really like, I was looking at the mobile app and it works really well with Keystone, like the QR thing that I was talking about off the top of the show. And I said we'd mention them later, but really, really simple to import your wallet to do transactions. So it's another option that Keystone Wallet works really well for. I imagine it'll also start working for something like the Foundation Passport relatively quickly here. You can also import other air gap ones like Cold Card, anything that can use an SD card and uses air gapping. You can do that as well. So all in all, kudos to Nunchuck for another big release here. Pretty awesome. Anyways, guys, I think that's it for me today. Thank you so much for watching and or listening. If you're on the pod after this or streaming sats, thank you guys for that. Please do like, subscribe, and share all of those things. I can't stress it enough. It helps so much when you guys do that. I really do appreciate everybody that has been. Of course, if you want to help with the show in another way, you can hit up the previously mentioned sponsors below: Shakepay, LEDN, Bitrefill, Keystone, and BillFodl, all in the links below. And if you really liked what you saw, you can always drop me a Bitcoin tip at my Strike page. That is strike.me/BTC sessions. You type in any amount you want, hit the tip button. You'll be greeted with a Lightning invoice, or if you tap to the right, a regular Bitcoin QR code. With that, I'm out. Have yourselves a wonderful day or evening, wherever you may be. Make sure you don't miss Why Are We Bullish tomorrow at 6 p.m. Eastern Time. And I'll see you guys next time for your daily session.
HODL the Bitcoin.